What is going on? Welcome back to Financial Journey. So today I want to talk to you about SoFi. I want to talk on a general aspect. Is right now the time to pack up SoFi and just run, or is it time to buy? I'm going to talk about a lot of different things, what the data is actually telling us behind the scenes. Before I get into any of that though, making sure you guys hit that thumbs up and subscribe. I greatly appreciate that. With that though, let's get right to it. Live ticker is going at the very bottom of the screen, currently down roughly about 4.5%, 4.6 million for volume, and that is pretty good for the first 1 hour of the trading day. So today is definitely going to be a very high volume day. 570,000 shares being purchased by institutions on the secondary markets. So again, that's pretty positive for the first hour, but generally speaking, there is a lot of fear out in the market, largely brought on because of the Feds. And even news came out today saying that the IMF is actually slashing their 2023 output. So right now, the estimate for 2022 is 3.2. For 2023, it's actually 2.9. So on a global scale, they're assuming it's actually going to be going down. So that's actually a pretty bold statement. And even more locally in the States, it does show that there is going to be a genuine recession, whatever that is determined. And I know they're, on a side note, they're actually trying to redefine what the definition of recession is. But still, on a side note, 2023 is when they're assuming that a recession is actually going to occur, not necessarily in 2022. So it's one of those things that a lot of people just need to keep that in mind. But still, like I've been saying over the last several videos, most likely this week was going to be extremely volatile because of largely the Feds. It's funny, last week we were in a value rally and everything was doing amazing, but like I said, a lot of people are very short-term minded. So when it came down to it, this week is the Fed and also a lot of critical actual earning ones, companies such as Apple as well. So that all combined together is adding a lot of fear. So it's funny that IMF and all those other institutions are coming out. So generally speaking, there's different ways to think about SoFi. SoFi, hands down, is a 2024 plus investment. A lot of people just need to realize that short term, SoFi is just trying to establish themselves and be a groundbreaking company in one of the oldest sectors is not an easy task. I always say that a lot. Some people just need to hear that, right? 2024 and onward is when a lot of their acquisitions actually will pay off and become very profitable. And not only that though, I think a lot of people need to realize about the actual data points behind the scenes. Obviously, they have their upcoming earnings, so that definitely will project to see where things are going. But right now, especially with such a high FICO score among its customers, even if a recession was to occur, most likely SoFi wouldn't be as badly hit as a lot of other banking sectors or companies. And also, more on a side note, I personally believe that there won't be a recession. I'm not a financial advisor though, so do your own due diligence. This is only for entertainment purposes. But when it comes down to it though, I personally feel that it's just a lot of short-term fear. A lot of media is playing off of this fear as well. But in reality though, when interest rates are actually increasing, which most likely the Feds are going to do it roughly about 75 basis points, possibly 1%, you never know. But typically when it comes down to it though, SoFi is going to benefit significantly from this. So at the end of the day, if you have a long-term mentality, then yes, buy these dips. This is an amazing company. It's going to do a lot of wonderful things. But if you do have a short-term kind of time frame, then you know what? There is a lot of short-term volatility that may cause this to go down a little bit further. And what I mean by that is, as far as some risks involved, just want to show you a couple different things. Shorts. So this chart right here shows the breakdown between closing price and the short percentage. And you know, on my channel, I like to use short interest as a good benchmark to kind of see where things are going. There is a wider and wider gap occurring between that. Shorts are basically in control of SoFi, and they have been over the last little bit. This is why even during the shareholder meeting, technically Anthony did say that the market is very irrational. So he basically was highlighting the fact that shorts own SoFi to some regard. I know a lot of people don't necessarily agree with that, but still. And looking technically on actual finances of actual SoFi. So like I said, their earnings are coming out, so hopefully things will improve significantly, but just want to go over the basic balance sheet. So typically when I look at a company, I like to look at the snapshot of this. Gives you a good projection of what they can and cannot do. So right now they do have 1.35 billion in cash equivalents and short-term investments, 524 mil in as far as long-term investments, 5.12 billion in total debt, which again, that is a little bit more worrisome. Initially, when interest rates were going up, that is one of the attributing factors why we went down almost like so much faster than any other growth stock, is because of that 5.12 billion. But keep in mind, some of that is actually very low cost or low interest rates financing, so that's it is a little bit more misleading if you just look at it on paper without knowing what's happening behind the scenes. But one concerning thing is right here. So the cash from operations, they're actually technically losing 2.7 billion overall. So that's something from a investor standpoint that is kind of keeping it down. So like I said, when it came down to their recent rally, I know this looks very advantageous and it was very exciting for us to get to almost $7, give or take. But keep in mind, during any other growth stock, it would have went up to around 750, if not 8 during the recent rally. So that's something you just need to factor in. There is always that underlying sense of fear, and it is largely because of kind of the burn rate and other different factors as well. But regardless of all that, that is short-term noise, like I said. So in the short term, if you do personally feel that the sell-off is far from over, that we are going to have a recession, and you know what, SoFi does have some underlying fears and some negatives to it that could cause it to go down a little bit more further, below possibly even that $5 mark. Again, I'm not a financial advisor. On the contrary though, I personally am invested in SoFi for the long term. So I know I'm going to hold out until 2024 regardless of if there is a recession, if there isn't, whatever it is. I personally don't always like to time the market particularly well, because usually in doing so you miss the overall rally. So that's my own 2 cents, because historically, post Fed meetings, we always go on a nice little rally. So that's just, again, something you need to keep in mind, because initially the media likes to pump out so much fear that during that actual Fed meeting, they do reassure the whole broader market. So that's typically what does happen. And at the end of the day, I personally feel you cannot ignore the fact that institutions are buying at the same level that they have been this whole time. Like, they haven't deterred from SoFi. They still continue to buy so much. So this is all the transactions on the dark pool just in the first hour and a half of the trading day, and even more so yesterday. There's a lot of big money getting in continuously. This is like a very amazing thing to always see behind the scenes. Again, depending, they might be doing flipping, they might do a lot of different things. I'm not really sure who is buying or technically what their reason or justification is, but when you see this amount of institutional purchasing, it makes you question, is there really going to be a recession? If there was going to be a huge recession that was going to end the world and everything like that, obviously a little bit more over dramatic there, but you kind of get what I'm saying. Why is there so much institutional purchasing? So take that how you see that. And one final thing, just want to give you a good summary of short interest and why that does play into everything in the bigger picture. So as of right now, they're actually increasing roughly about 483,000 shares, which works out to be 0.39%, but still 16.79 is the short interest. That's percentage of the free float. At the end of the day, we were roughly about 25%, which is a very big deal. The fact that we've gone down almost 10%, that definitely does go to show that the shorts are a little bit more hesitant about SoFi, that potentially, whether it just be their earnings, having a nice little catalyst from that could cause SoFi to go to all-time highs, having a nice little upward trend, because I personally do feel that we should be easily at $10. I have been saying this whole time, and unfortunately, just like even Anthony said, and I already reiterated, the market is acting very irrational, and shorts definitely like to control SoFi. So in sum, if you are a very short-term mentality and you are possibly on margin or whatever floats your boat, whatever it is, then you know what, there might be a little bit more downside to SoFi. So technically you might want to sell. Again, that's my own 2 cents. If you do have a long-term mentality, you have a strong conviction for SoFi, as do I, and you know by 2024 this will easily be $40 plus, then you know what, that's a pretty good return on investment. I'm pretty happy with that. So this is where you kind of have to do your own due diligence and where you see things going in the short term. But I personally feel that there isn't going to be a recession at all. That most likely is just a lot of tentative fear, because a lot of the data points that's happening behind the scenes are all showing that the actual economy is very strong. And I've been saying that this whole time, regardless of when we were at almost all-time lows. I was saying, you know what, the data points don't lie. And not only that though, with the big money behind the scenes is still continuously buying. You cannot ignore those points. And even more so on the technicals, I think we are going down right now because right here we are very much overbought for the last little bit. So that's something you need to keep in mind. The technicals are just cooling off, and nothing wrong with that. We're technically bouncing off that central boiling band today, which should be fairly good. And RSI currently is at 49, fairly flat, and momentum shows number of buyers. And as of right now, because most likely the fear is just been going down. So let me know your thoughts on SoFi in the comments below. Let me know as well what you personally feel is the best option to do, whether you buy now or you feel it might be going down to $5 or $5.50 or whatever it is, and that might be the best time to buy. Let me know your thoughts on all of that in the comments below. If you haven't already, hit that thumbs up and subscribe. I greatly appreciate that. And if you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that, I appreciate you guys watching.